The Laundry is proudly produced by Strise, your AML automation software for faster onboarding, smarter monitoring, and growth without overhead.
Some of them, I'd say, probably pretty hard to distinguish a money laundering front from just a regular high street store.
I want to reiterate on the price point. If you see cereal that's like 10x the normal street value, notify the authorities. Welcome to The Laundry, the podcast connecting AML, compliance, and financial crime to the real world. In the last few weeks, British news has been filled with dramatic scenes of raids on very ordinary-looking mini-marts, vape shops, barbers, food takeaways, and American-style candy stores.
Hello to you. We begin with the BBC investigation into organised crime on high streets across Britain involving illegal working, fraud and tax evasion.
We've uncovered a hidden world of ghost directors, tax evasion and illegal working.
Tourists who were charged £900 for 2 packets of sweets led police to discover the largest haul of unsafe or fake goods to have ever been seized from a shop on Oxford Street.
These days it's all vape shops, illegal tobacco shops and barber shops.
Loads and loads of places up there that selling the illegal cigarettes.
I see data full of red flags. You see the same 2 or 3 names occurring repeatedly over and over again.
Police seized 2,892 American food items, more than 30,000 cigarettes and 3,182 single-use vapes.
We also seized a range of dangerous and illegal items including 4 knives, 1 knuckle duster, 2 firearms and a quantity of cannabis.
And all this is driven by organised crime.
The incidence of all of those things bear strong hallmarks of organised criminal activity in an organised criminal network.
Whilst these establishments appear legitimate, many were being used to conceal illicit cash flow.
There's no control. Once one of them gets in, all the rest get in.
So how is all this criminality possible in full view of authorities?
More than 2,700 high street stores across the UK were visited by police, leading to 900 arrests and more than £10 million in criminal proceeds seized. But while the news focused in on the hauls of the counterfeit cigarettes, it is how this web of small businesses fit into the money laundering where we should be really paying attention. I'm your host, Fredrik Riiser, Head of Strategy and Business Development at Strise, and in this episode, we will be revealing what American candy stores can tell us about money laundering. We'll be discussing how these shop fronts work for laundering criminal funds, why this isn't just a UK problem, and how the data can help us see the full picture. To dive into this topic, I'm here with my laundry co-host and dear friend, Robin Lycka, Employee of the Month and Solution Architect at Strise. Now, Robin, welcome. First and foremost, you've been interviewed by journalists in the UK national media on this topic over the last few weeks, but there's a question that you have not answered fully yet, which is important. What is your favorite American candy?
Beer and freedom.
Firstly, let's look into some fun trivia. Can you guess which Chicago-based gangster was sort of the front for money laundering or coined the term?
Well, I remember you doing this history of money laundering, so I'm going to go with likely to be the laundromats that Al Capone ran.
100% correct. So that was during the 1920s, so it's more than a century old, these type of techniques, right? And fun fact about Al Capone, to ensure that the actual front, the money laundering front, where they actually did launder clothes as well as money, he ensured to pay the employees more than minimum wage to ensure they did not speak to any police, which I think was kind of probably a good strategy on his end. This is an illegal practice, obviously. And as mentioned, it's over a century old. But has it changed at all? Or does the basic premise remain the same, do you think?
I think the premise remains the same. Obviously, the techniques have evolved and now exists multiple methods. So it's not only limited to trying to launder cash, it's also increased in complexity, obviously, due to the regulations and continuous scrutiny. But it's also now a lot about trying to move hard cash into digital cash and vice versa.
So what was your first reaction when you saw these rates?
Well, my first reaction was that I'm not really surprised. I've been looking at this data for a long time, and it's almost like, hello, Captain Obvious. There are so many examples of this, and it's a typical example of hiding in plain sight.
Yeah, but do you think this raid, seeing as it was it 900 stores that was raided, I think, and again over 10 million pounds worth of proceeds seized. Do you think like the sheer size of this will make a dent in the fight against money laundering?
I'm not sure I would go as far as call it a dent. It's something for the media to pay attention to, and it's also something for the general public to pay attention to, so that we can at least call out the ones that are hiding in plain sight that are obvious, and that we kind of stop supporting these businesses by actually bringing our kids when we're on vacation into these high street stores that sell American candy or even counterfeit American candy.
I agree. Do you think we're seeing an increase in opportunities for these front businesses to thrive the way that it's set up now?
I'd say that this, at the moment, I'd say that this is now going to place all of those companies under high scrutiny. So I would say that, if I was a bank and I had a risk-based approach, I'd say that any company incepted very early on, if it's a recently incepted company, there's a business director with no former business relationships. There's no real basis of why they're opening up this business. I'd say that I'd put them under enhanced due diligence. It's a typical saying of your biggest risk is in your low risk. So even though if you look at from a data perspective, this could easily be seen as low risk, straight through processing kind of business. But based on industry code, former business relations, recently incepted, these businesses are almost more and more safe the longer they've been in business, because the modus that we're seeing is that they only exist for less than the amount of time that they need before they have to file their books, so they kind of close down after 12 to 18 months.
But do you think, based on the sheer size of this particular raid, that they would be potentially able to figure out, in terms of the value chain of the criminal networks here, more information? I'm thinking the fact you'd be able to interrogate potentially 900 different people, which at some point might lead to a lot of data that they can share regarding who do they do business with, where are they getting their products from, is this some sort of larger criminal syndicate that owns and operates the same value chain, and this could be the stepping stone into starting to piece together and hopefully pull apart a larger sort of crime organization.
That's what I would hope that they'll get. What I think that it will probably amount to is that you'll sort of have two buckets. You'll have one bucket of the smaller individual criminals, and then one bucket where it goes into larger criminal networks. And exposing those criminal networks is obviously what you want to get at with a raid of this size.
Because how do these smaller sort of front businesses tie into wider financial crime or crime as a whole?
Well, it's almost kind of like a graph model. You'll have multiple of these small businesses kind of sitting at the bottom of the food chain, and they'll feed into other businesses. You'll have things like VAT fraud, fake invoicing between the companies, fake invoicing to supplier networks, and then the supplier networks works as the level above all of these small businesses, and ultimately they will feed into the same source. So it's always about following the money. But the difficult thing is that you can look at these small individual businesses, but it's going to be very hard to trace any kind of ownership or any kind of data apart from perhaps the formation agents, addresses. So finding companies that have the same director across multiple companies, that's going to be sort of the confluence points and the data points that you want to look at.
I wonder how many of these front businesses are opened with the sheer purpose of laundering money, doing crime, and how many transformed into it. And I especially thinking about the Al Capone gangster era that we just mentioned regarding the sort of origin of the term money laundering. Back in sort of their operating model, racketeering or extorting these type of businesses to get a part of the proceeds. So basically you pay a premium or else the gangsters burn down your shop was part of the business model for the gangsters or the mafia. I wonder how much today these type of front businesses getting visitors from gangsters, and they don't ask you to pay them 10% of whatever type of cash flow you have that month, but they literally say, we're going to need you to launder this money for us or else we'll burn down your shop or worse.
Yeah, or even it's obviously alluring if you're a small business high street shop owner and you're obviously probably not making bank. So I think like the new modus of this, to use the same analogy of the gangster time, you'll have the capos, which is now typically referred to as the alphas. So they will be the first ones that were recruited from the actual criminal network. And then they get some kind of trust role in this. So they're like the middle management of the criminal organization. They'll sometimes be seen as the directors or the strawmen opening up the business, but also the ones recruiting other existing high street shops into this. So I think there is similarity in that. And I think a lot of them as well, if you look at Companies House stories that we've seen, where you have, I don't know, some random residential address being exploited and used for 100 business addresses. And then you rock up to their place and knock on the door. And there's just, some elderly couple living there. And they said they were offered £20 per business as a monthly registration fee that they just receive. There's probably, as an average Joe, you probably don't see anything bad with that. You're basically acting as a postbox mail service, but it is in fact by proxy you are enabling the criminals as well. So falling into that same kind of modus with being a high street owner, it's very likely that you are first recruited in by seemingly just helping someone. And then as it progresses, you more and more become aware. And then suddenly you're so caught up in it that it's difficult to find your own exit from doing what you now realize is criminal activity.
A very good example, and it ties back to social or society being aware of these type of risks as well, and starting to, as you mentioned now, those type of examples where maybe you borrowed money to ensure the business stayed alive or kept afloat for a short time, but you borrowed it from the wrong person or the wrong gang, as an example, and all of a sudden you're in the thick of it and you're extorted because who knows, they want to rat you out or worse. It's a really interesting and compelling narrative. I wonder, in terms of this being UK specific, and UK is still a fairly cash heavy economy. I read that I think it's like 14 to 15% of payments are still made in cash. Comparing that to the likes of the Nordic countries, such as Sweden, as an example, where cash is disappearing, is becoming a cashless society with I think like 2 to 3%, which is obviously way less than 15. I wonder how much that helps when it comes to blocking these type of front end businesses that are obviously very cash heavy. What do you think?
Well, we've seen parts of the effects of this with the Norwegian bank basically saying no to getting our currency back into the country after it's been exported, passed through a couple of Eastern European banks, and then sent back into the country. So Norway decided sometime last year, prior to the money laundering conference in Norway, there was this report about this subject. And I think that the effect that we're seeing in the cashless society is that you need to export the currency and then re-import it. So if the central bank starts saying no to receiving back the cash when you can't trace its origin, that would also put a pretty big stop to like utilizing the currency as a means of money laundering.
That's a good point. Traditionally, you had the placement as well as the layering to integrate it into the legit economy. Now you simply, with the digital economy, you only have the cycling or the layering part. So it kind of removes the placement issue. Tying this back to the criminal networks, a BBC news story revealed that it was more than 100 businesses that were linked to a Kurdish gang, which enabled migrants to work illegally, selling counterfeit cigarettes in high street mini-marts. Some people might be looking at the seizure of counterfeit cigarettes on their TVs and thinking like, boo-hoo, poor big tobacco. But how do these type of counterfeit goods tie into the wider crime issues?
Well, counterfeit goods, the one of the big problems is that the production is unregulated. So you never know what actually goes into the production line. So, you know, cigarettes is a terrible example because cigarettes are bad. You shouldn't be smoking them. But if the process of the production is not regulated, then you're probably going to be exposed to even worse chemicals. But even though this is cigarettes, counterfeit cigarettes, it's not only that. There's forced labor, there's trafficking. There are so many aspects of this apart from just being counterfeit cigarettes. And if you then transpose that into the American candy stores, I actually saw a report where they analyzed, I think it was like a Hershey bar or something like that, sort of stereotypical American candy. And they actually found like the traces of these forever chemicals and plastics in the counterfeit candies were way above what you could even consider legal. So they're actually downright poisonous. And you think about that from the perspective of you're bringing your family to London. Your kids are there running down the high street and they're like, yeah, American candy, yeah, Hershey bar. You're feeding them plastic and chemicals. It's not even, I don't know, sugar is bad as well. You talk about cigarettes is bad. Sugar is also bad. But sugar with forever chemicals and plastic, you're literally grounding up car tires and mixing them with the chocolate bars. And that's what we're feeding the kids when we're there on vacation. I don't know. It blows my mind that someone would even bother creating a counterfeit candy bar. But obviously, as always, the sheer scrupulousness of anything when it comes to criminal activities and the idea of criminal profits.
It's a really good point. I think one thing that's really interesting about cigarettes is that it's a universally known brand. So as an example, if you have a big tobacco brand, it's basically in many ways a set currency that you can bring into any economy. And it's quite small in terms of how much you get in a package. Like you can mention the same regarding Coca-Cola as an example as well, but smuggling, like how many liters of soda would that take, right? As compared to the value of a packet of cigarettes as well. On that note, we'll be right back after the break to tell you a bit about how the data can be used to help compliance and AML teams. Do not go anywhere.
I want to introduce you to a game changer in the compliance and portfolio risk management, the Strise Portfolio Health Dashboard. This new feature gives you a comprehensive overview of your portfolio risk right from your Strise homepage. What we've built is tackling three of the most critical challenges we all face when it comes to portfolio health. 1, the lack of visibility into portfolio level risk. 2, relying on time-consuming and fragmented data sources. 3, missed compliance obligations due to unclear and inaccessible data. From feedback with compliance officers using our product, we know that having access to a central view is vital in being able to quickly identify PEPs, sanctions, and risk levels across all entities, so you can quickly identify high-risk accounts that need immediate attention. And for those of you working as risk analysts, it's likely that you'll want to be alerted about any up-and-coming reviews for high-risk accounts to ensure a timely and effective risk management. That's exactly why we've created the Portfolio Health Dashboard. Stay tuned for what's next.
Welcome back, listener. A reminder that all your laundry hosts are on LinkedIn. So if you want to chat about today's episode or any other episode, come find us and slide into our DMs. Now, we've talked about the scale of the criminal problem. Let's start looking into the potential solutions here. So what are some of the biggest red flags when it comes to the data perspective that businesses are being used as money laundering fronts?
I find this one very difficult because there isn't a lot of data that shows a red flag. There are other cases where you have very, very clear red flags, overseas ownership, shell companies, yada, yada. But in these ones, it's extremely difficult to separate a money laundering shopfront from a legit shopfront. So how do you avoid this becoming a problem for the ones that run legitimate businesses? So I'd say that there are a few like sudden spikes of activity or new owners taking over existing businesses, change in patterns with cash deposits. It's a complicated picture, and I'd say it's difficult to find singular data points that are red flags. Two of the ones that I typically see is when you have a high street shop that shares address with a formation agent, or the address location is different from the registry location, or that there's been a formation agent that have filed for the company and perhaps even changed directors recently.
We talked about the data, but if you were investigating these type of cases, or you were on the lookout, stroll on Saturday morning, High Street, London, you as an investigator would like to look into the shops down the road and see who do we believe might be laundering money through their business. What would you be looking for?
Yeah, it's a good question. Maybe a throwback to the money laundering conference last week, where we had this investigator from the insurance company that showed their methods of actually taking photos and uncovering social fraud. So I actually believe that a lot of this boils down to good old grunt work. There isn't a lot that I'm seeing that can automate this. But if you walk into any of these American candy stores in particular, their goods are highly overpriced. It doesn't make sense at all. Still, tourists pay money for this. And if you look at other things, I'd say that there's always like that calculation that you can do. I remember I did this investigation on the car washes and looking at their revenue divided by the number of cars they would wash every day. And you come out with like, they have to wash 120 cars every day. And then spent a couple of hours outside one of these car washes, and they had like 2 cars as opposed to the 25 that they would actually have to have. So there's that quick maths way of looking at it. Does it make sense that a small high street barber shop has a revenue of £400,000? Probably not. So yeah, I think it's grunt work.
It's a really good example, and it's kind of funny walking into some of these stores and seeing that you have cereal that literally costs like 5 times as much as it would on the supermarket, and you'd ask yourself like, well, who the hell buys cereal at 5 times the normal rate? That should definitely be opening up a few questions at least. But in terms of the universal beneficial owners, we talk a lot about that on this podcast. But what does the ownership registries and the UBO maps tell us currently, specifically for these type of cases? And what are they not telling us that we should look into?
I think the one thing, going back to what I said earlier on the alphas, you can see if you have the same director or same UBO filing for multiple companies, and it probably doesn't make sense that this person is the owner of 5 barbershops on the same street. So that's one. There is obviously, if there are like complex ownership structures and those kind of things, but oftentimes these small businesses, they don't have a lot of complexity in the data. So there's one that I was looking at with these barber shops down in Coventry, and the area doesn't kind of make sense that they should have that many barber shops. So I found one local formation agent. It was funny because they were placed right next to one of these barber shops, and that specific address had like 23 barber shops registered to the same address, and then the formation agent is right next to them. So it's kind of, again, Captain Obvious once you start looking at it. But then it goes back to, this is just one example. Imagine how many of them exist. So the sheer scale of investigating this, and for me, I'm a simple village idiot, so I can look at data and I can find some examples, but this is not convicting evidence. I can't rock up to these barbershops and say, hey, you need to close down your barbershop, you're doing money laundering. So what kind of baffles me every time when we see these examples of the government exposing in the money laundering conference, again, is so fresh in mind, so it's difficult not to think about it. But I remember there was this one presentation where they said something, and we found 2,400 euros.
Yeah. I vividly remember that one as well.
So and we're not even, it's not even a speck of a drop in the ocean. And I think it goes back to the same thing with these high street shops. I don't know really what the UBO maps can tell us about this. It's difficult. Finding confluence points, again, that's the important part.
So this is a systematic issue in terms of that you're able to set up shop quite quickly and you're able to transfer ownership quite quickly. In fact, so quickly that even when the year rolls around, you might just transfer, you might shut down shop, or you might transfer the ownership, so that the person that potentially should be investigated is no longer the person on the balance sheet or the ownership in the ownership map. But to try to combat this, what do we need to see from national business registries, such as Companies House, as an example?
Well, they've had very, very lax rules, and they've allowed fake filings for a very long time. And we're seeing the same thing across most registers. Funny name examples, if you search in Companies House, you'll actually find Darth Vader, Elon Musk, and there's even Adolf Tooth Fairy Hitler. So there are a lot of these more or less funny fake names in there. But as of, I believe, Monday-ish this week, Companies House now require ID verification when you file for a company. And they're going to retroactively require this for all companies. And they have about 1 year from now, if I remember correctly. So 1 year from now, there's going to be a really good red flag for anyone doing KYC on UK-based entities if their directors or UBOs haven't filed their identity verification. You can even see this now already in Companies House. There's a badge for the ones that have verified their identity.
It's going to be exciting to follow that journey and see, maybe a year down the line, we'll have an episode about, retrospectively looking into the state of Companies House based on this change, and can this be an inspiration for other national business registries as well? Do you think overall data is the key to solving this?
I think data is always the fundamental key for any good AML process, but I do think we need to enable the enforcers and the police force in particular to just enable them by bigger budgets. We need more feet on the ground to combat these Smurf setups of high street businesses.
More raids.
Yes, I think so. And I think it's interesting as well because there's like this, you have to reach this critical mass of people until you can actually have all of these small businesses. Because if you look at it on our doorstep, there are no shops like this. I know there's one like popular candy store, but it's not like the American candy stores with counterfeit goods, as far as I know. We're not seeing the same thing in our small country, which is like basically a borough of London. There are, 5-6 million people in our country now? It's like half of London.
Yeah, so it's a very good point. In terms of trade-based money laundering, as well, it's interesting in terms of how easy it is to set up these type of shops and how many of them have value chains that reaches obviously cross borders, where you can import goods and obviously then get in contact with criminal networks, or the criminal networks can deliberately set up shop to import or export goods as well. So I'm just thinking in terms of today's day and age, where there's so much scrutiny in terms of cross-border payments. There's real-time transaction sort of screening and the ability to stop transactions and so forth. But in terms of the lack of information that you really require for these type of shops to operate their business, they are allowed to move goods so freely. So for them to focus efforts on trade-based money laundering as opposed to just cash-heavy money laundering or digital economy sort of money cycling, it's an interesting sort of conundrum in terms of how much more scrutiny should be put on these small business owners, that most of them are hopefully set up legit, but obviously the consequence with so little scrutiny is that you get gaps, you get the loopholes that the criminals can exploit. Now, in terms of ending the episode, we do have a couple of quick fire questions for you as well, Robin. So I wonder, are you ready?
Born ready.
You walk into a store on your local high street or district. What's the most obvious sign it might be linked to money laundering?
I mean, if bro's behind the counter counting his stacks, then probably walk away.
Yeah, the most obvious sign would be a literal sign saying "launder your money here."
I think overpriced goods. If it's these candy stores, some of them I'd say probably pretty hard to distinguish a money laundering front from just a regular high street store.
I want to reiterate on the price point. If you see cereal that's like 10x the normal street value, notify the authorities. So what are some of the most valuable data points for tackling this issue?
I think all of the confluence points. When you look at small high street businesses and you find converging data, multiple businesses registered at the same address, that kind of thing.
Despite the arrests, do you see this problem getting better or worse in the next few years?
I hope it gets better. I'm afraid it gets worse as criminals get more and more creative.
Why does who own your local mini-mart matter in the real world?
I think the most valuable point is the danger of counterfeit goods, especially consumables.
That does bring this spin of the laundry to an end. Robin, thank you so much for joining me. Where can people find and connect with you?
Well, obviously on my LinkedIn /Robin Lycka or robin@strise.ai.
And thank you for listening. If you've enjoyed this podcast, check out the back catalog of 140 episodes and follow The Laundry on your podcast platform of choice. Please share the podcast on your social media channels. Tell a colleague to subscribe. Maybe give us a 5-star rating. It really does help people find us. You got something interesting that you want to share with us? Comment on the Strise LinkedIn page, my LinkedIn page, or email laundry@strise.ai. Your host for this episode was me, Fredrik. Our producer was Matthew, and our editor was Dominic. Their Laundry is proudly produced by Strise. Visit strise.ai for more information. We'll see you next time.
Welcome to the data. We got fun and games.
The Laundry is proudly produced by Strise, your AML automation software for faster onboarding, smarter monitoring, and growth without overhead.